Hey everyone, this is Dmitry Pargamanik with MarketChameleon.com. In this video, I'm going to demonstrate to you how you could quickly use an options profit calculator on an Iron Condor option strategy. And we're going to use SPY options chain in this example. When I scroll down here, I selected the next monthly expiration, August 18th in SPY, and we see here the options chain for all the different individual options available for that SPY expiration. And when you do an Iron Condor, you have 4 legs that you need to select to set up that Iron Condor strategy. And for convenience, instead of typing each leg and strike and each price individually, we allow you to select it right from the options chain. It will select those and auto-populate the prices, the strikes, and all that stuff for you so you can run that option profit calculator. So let's demonstrate it really quickly. And I'm going to start out to set up this Iron Condor from the at the money. Right now, SPY is 456.50. So let's use the 456 strike as the at the money. And to make it easy, what I'm going to do is do a $5 Iron Condor. So I'm going to go $5 to do the first 2 legs. I'm going to go $5 above the current stock price. So let's go to 461, and I'm going to start out by selling that call. And then let's go $5 above that to 466 and buy this next call. So you can see as I'm clicking on the bid, it auto-populates a sell August 18th call on the 461 strike at $2.82, which is the current market bid, and then buying the August 18th 466 call for $1.25, which is the market offer. So first, we set up the Iron Condor by selling an out of the money call spread. The next part of the Iron Condor is selling an out of the money put spread. And let's do the same thing here. We're going to start out from the 456 strike. Let's move down $5 from there. So let's sell the 451 put. I'm going to click on that bid. And once I do that, you see the third leg pop up in here with the current market price. And then let's go $5 below that. So let's go to the 446 strike. I'm going to buy that put. Okay, so now we have all 4 legs populated in here with the current market prices. And now what we want to do is run the option profit calculator to see at expiration, where are our profits and losses based on different stock price ranges. Okay, so to know that, let's run the calculator, click the calculator, and what it will do is show a payout diagram, because down here we have different stock prices at expiration, and these are the profit and losses that correspond with those stock prices. So we can see here our sweet spot, that's in this range over here. So between, we could see here between the 461 and 451 strike, right? So over here we got the 451 strike, 461 strike over here, and anything in between those, that is our sweet spot, because if the stock ends up there at expiration, all the options expire worthless, they go away, and you keep the initial credit that you sold this strategy at, which in this case is 243. And then as the stock moves above those strikes or below those break-even strikes, you see how your P&L changes and then where you're stopped out. So you can see here to the upside, to the downside, you're stopped out at a $257 loss. And same thing to the upside, you're stopped out at $257 loss if the stock goes all the way up and continues up this way. If you want to change the prices you can go up here and move the prices up or down and of each leg, and then you could rerun the calculator to see how that looks like if you change the prices of that Iron Condor. If you want to change the strikes, you could also change the strikes from here, and so forth. So this is a demonstration how you could quickly set up an Iron Condor, look at the profit and losses at expiration, and make a judgment if that strategy lines up with your unique future outlook on the stock. Thanks everyone for joining, and hope to see you guys in the next video.